Everybody thought that 2025 was going to be the big year for IPOs, and in some cases, it certainly was. We finally saw some big names go public, like Figma and Circle and CoreWeave and Klarna. But you do not have to look far to see that of all the tech companies that have gone public this year, only a select few are trading above their IPO price, which is casting doubt on the many other big tech companies waiting in the wings. Joining me now is Cory Weinberg, our Deputy Bureau Chief of Finance, to tell us more about what he's hearing on this beat. Cory, welcome back to the show. It's great to see you.
Hey, Koff, great to see you.
Well, I'm excited to talk about our favorite topic to close out the year, which is the year of IPOs that we've had and the year of IPOs that 2026 could be. So you published a story on this today, and my read on it is what? SpaceX is ready to go, but everybody else is kind of not? I mean, what's the deal?
Yeah, I think we have this dynamic in the IPO market right now where investors seemingly have been honestly like not that interested or that enthusiastic about the types of companies that make up the vast majority of the VC backed tech IPO market, this kind of crucial segment that's often been, sort of a key engine of the IPO market. These, companies that are valued in sort of the 5 to $15 billion range, doing hundreds of millions of dollars of revenue, maybe close to profitable. A lot of them have met a fairly cool reception after their debuts. These are companies that are, pretty notable in the VC-backed world. Klarna, Navan, Chime, StubHub, companies that have well-known brands. They've traded poorly. Companies that are sort of Mag 7 of the private markets, if you will, the SpaceX's, the
Yeah.
OpenAI, the Anthropics, like those are the ones everyone's pining to get a piece of.
You had a name for this group, right? You call
Well,
or you called
I
it this
yeah, I called them the
you
Shy
the
Five
Shy Five, right?
because these are the private companies that were not looking to make their public debuts anytime soon.
Right. Okay. Well, I mean, we'll get back to the Shy Five in a second, but so the companies that have gone public, I mean, you noted in the story, companies like Klarna, StubHub, Gemini, I mean, their stocks haven't exactly done the way I think maybe some people would have hoped out of the gate. Does any of that have to do with the lockup periods?
So I think that is sort of the defense that I think a lot of bankers would say is like, especially companies that went public in the September, October period, which was a pretty heavy period for IPOs. This was after Figma went public and there was kind of a real opening in the market before the government shut down. Obviously it hasn't been 6 months yet. So I think there is a case where investors sort of wait on the sidelines before they buy a stock before the lockup because they want to see how the stock performs. Because often a stock goes down after sort of a lockup expires because there's more shares that hit the market. So that's certainly a dynamic, but I think there's definitely a more qualitative aspect here rather than just a kind of market driven, sort of technicality. And I think it's just like I hear it from IPO investors all the time. It's like people just honestly like at a certain price,
Hmm.
they care about buying, a StubHub or a Navan or a Chime, but they aren't kind of necessarily excited about bidding them up. They have a lot of choices out there in the public market. It's not the same sort of scarcity driven environment that the private markets are.
And so I just want to understand the dynamic here. So when you say the bankers, they point to this lockup period, and then there's also the reality that the lockup period hasn't actually, I mean, it hasn't been 6 months yet, as you say. Is the idea here that, I mean, bankers would say, oh, people are not buying the stock right now because they're nervous that when the lockup expires, then they can sort of expect some kind of a further tank.
Yeah, I mean, there's a reality there. I think it's sort of uh, overall. I think the takeaway is investors are wanting to wait and see sort of what what happens with these companies in that sort of $5 to $15 billion market cap range. They want to see how does it perform after the lockup expires? They want to see how does the company, more importantly, how does the company perform?
Mhm.
Like, are they actually quarter after quarter doing what they said they were going to do? That's a pretty basic sort of dynamic of being a public company. But when you don't have the same sort of FOMO driven, retail driven backstop that a company that's in crypto or AI or a SpaceX would have, you're not going to get the benefit of the doubt because people are not chasing that stock necessarily.
Right. So let me ask you this, Corey. You've been covering this space now for a while, and you also have a side of you that you really like to go deep on specific companies. And you've been at the information now for 10 years. We should say you just celebrated your 10-year anniversary, and we were taking a trip down memory lane. You covered companies like Airbnb closely. I mean, more recently there was Scale AI. When you think about the companies out there right now, they don't have to be pre-IPO companies, but what company going into 2026 is just the most fascinating business to you right now that you're watching into the new year?
Oh, that's interesting. I mean, given my move to Los Angeles, I definitely am trying to swim in the waters of defense tech a little bit more. And so you have a company in the private markets like Anduril, which I've written about a fair amount over the last year or so, where they're at this really interesting crucible moment where they're valued at $30 billion. They're generating about 2 billion in revenue. They're benefiting seemingly from a shift in the Pentagon's sort of attitude towards uh, sending contracts to younger, more unproven companies. And this is going to be the company whose IPO, which will probably come, I don't know, a year after SpaceX, maybe a little bit longer. Who I don't have exact information on that,
Right.
but it'll be after SpaceX, and they are smaller, younger than SpaceX. If the Anduril, IPO doesn't necessarily go according to plan, that's going to have a huge ripple effect on the rest of the entire like defense tech class, so to speak, where there's been a ton of venture money going into it.
And
Uh,
I presume there's a lot of these late stage defense tech companies popping up now that are sort of
Oh, a
rallying
ton,
around.
and very speculative, and they have very little actual revenue. There's a lot of vibe investing going on right now in the tech world. Some of it's obviously legitimate, but venture capital. It's a business where you're rewarded for taking bets that are not sure things, obviously. So.
Great. Well, Corey, I want to thank you for coming on. I look forward to having you on more in the new year to talk about defense tech or IPOs or anything you want, really, because, well, you've covered it all in your 10 years, and I'm excited for the next 10. Thank you for joining us. That is Cory Weinberg, our Deputy Bureau Chief of Finance here at The Information.